And welcome. It's Mary Ellen McGonagle with the MEM Edge Show. Great to be back. I want to wish everyone a very happy new year as we enter this rather bullish 2020. So let's go ahead and get started. Before I forget, this is the show where we put you in front of where the action is in the broader markets, and quite a lot of stocks are popping, a lot of action. So let's dive right in, take a look at what we are going to be covering today. The first, as always, we're going to do a deep dive into the current markets, where we are, not only with the broader markets, but then drilling down into those sectors, those industry groups, all with an eye toward getting in front of those areas that are exhibiting superior strength. We want to take advantage of that strength and ideally capture these stocks that are poised to outperform the broader markets. So from there, we are going to take a look at stocks that presented at the CES show. And I should have probably written that out. It's the Consumer Electronics Show, and it's the world's largest technology stage. It's been going on for almost 30 years now. It's a very highly anticipated event. Today is the last day of that event, but there were some announcements that came out. And I'll tell you the relevance there. As of, for instance, last year, Apple did come out with an announcement relating to the ability to live stream TV shows on your iPhones without having to subscribe to Apple TV. And the news was met with some positiveness, but then mid-year, as the streaming took off, the stock really exploded. So we're going to take a look at some other stocks this year that had some announcements that could easily propel those stocks higher as well. We're also going to take a look. Earnings season is due to start next week. Unbelievable. We're going to start seeing some of these fourth quarter numbers coming in, and a number of prominent stocks that are due to report. And as we've done this in the past, these are stocks that will tend to set the pace, not only for their particular industry groups, but also the broader markets. There are going to be a lot of eyeballs on these companies reporting. Chinese ADR stocks. The Chinese market is hitting a new high, and there is one particular area that is showing superior relative outperformance, and then we'll uncover other stocks as well that could be quite compelling as these Chinese stocks continue to propel to new highs. So let's go ahead and get started with that broader market view. We are looking here at a daily chart of the S&P 500 large cap index. The index was up about almost 1% for the week. And as you all may know, it was quite a dicey week with Iran and Mideast tensions that were quite heightened a week ago. But marvelously, the markets were able to, I wouldn't say shrug that off, but were able to advance despite the tensions that were presented. So that's very, very bullish sign. And before we go into the S&P, I did want to mention that the NASDAQ was up double the S&P 500, and we're going to get into where that strength was there. But for now, the S&P 500, as you may know, I'm going to pay attention here to the shorter term green line. That's your 10-day simple moving average. We want to see this index not only find support, you can see where it has pulled back to that 10-day. We want the index to be trading above while this 10-day is in an uptrend. This is a very bullish sign, and so the uptrend is still very much in place for the markets. And then as outlying other indicators, I like to pay attention to the RSI. That's your relative strength indicator. Two items to note in relative to this indicator is ideally, you want it to be above that 50, which is viewed as neutral, ideally also in an uptrend. As it gets into this above 70, that's viewed as overbought, a little bit of a yellow flag, but we are not in that position this week, which is quite constructive. So I want to go back and share with you back in October, early October, when my work signaled that this particular pullback had reversed, and one of the signals, of course, was the S&P 500 breaking back above that 10-day simple moving average, in line with the RSI breaking above that 50 and trending upward. So again, we are still in good standing. Moving average convergence divergence, this is another momentum indicator. Want to see that above that net neutral zero, and we are in fact in that positive territory. So overall, the broader markets uptrend, they still look quite healthy. Bull market still very much in place. So beyond that, we want to go ahead and take a look at some of the underlying groups and sectors and get a better feel within the S&P where that strength is, where are the money flows either continuing or beginning to migrate toward. So what we're looking at here is called the candle glance view. You can access that from the first page of StockCharts.com. You can either go directly to Candle Glance or to their sector summary and ask for a Candle Glance view. And this is a 2-month daily price chart for each of these sub-sectors within the S&P. I like to overlay an RSI, that relative strength indicator, and then sort these 2-month price charts in descending order, with an eye toward getting a handle very quickly on where the strength is. And if you do this regularly, and really weekly would be enough for you to do this, you will not only be able to pinpoint where the current strength is, you can also keep an eye toward potential rotation as these sectors that are down here in the weaker areas begin to move forward into the forefront. And I'll share a couple of areas that are in fact doing just that. But for now, we want to pay attention to and key in on where the strength is, and it is technology all the way. Tech, for those of you that follow the market super closely, will know that in 2019, this sector, XLK technology, was far and away the year-to-date big performer, 43+% for the entire year. That the next group was in the mid-20s as it relates to year-to-date 2019 performance. But let's take a look here at healthcare. Going into the fourth quarter of 2019, healthcare was the weakest. It was a very sub-performing area, but it did pick up in the fourth quarter. And here we have it as the second highest. And we're going to take a look at relative strength within healthcare, but good to note, XLC, that's your communication services sector. And we'll look at some of the subgroupings here, but it is going to be, for this week, primarily internet driven. Google and Facebook account for 30% of the weighting within XLC. Both stocks were up over 4% this week. So huge move, boosting XLC. Other internet areas are also picking up. So then we can quietly progress now down to these other areas. I wanted to point out to you some areas that are kind of languishing a bit. Financials had a very good start. This is December. They were up over 8% for the month, but for January, they're in a bit of a sideways kind of a back and fill languishing formation. But there are a couple of groups that are moving to the forefront. One is these REITs, XLRE. These are your higher yielding stocks as a there are some areas here. I'm hoping we're going to be able to get to that, because there are two areas within REITs that are showing superior outperformance. For those of you that think the markets may be stretched, certainly I would argue we could do a pullback. You may want to look at some of these higher yielding defensive REIT stocks, and utilities are another higher yielding area that is moving a little bit to the forefront here. And among both groups, it's not every subgroup that's participating. So we will get into that. So beyond these sectors, let's go ahead and drill down even further into some sub-industry groups within these sectors. So I have an area of the markets, as many of you may know, My background for 15 years was with William O'Neill and Company. And Bill O'Neill was the founder of Investors Business Daily. And this publication is all about helping investors uncover these huge, big winning stocks, these outperformers. And by and large, those outperformers are going to be in high growth areas. So that's my focus when I'm looking at the markets. So what I've done here is we have the broader market indices, but I've also put in some of these high growth software stocks, IGV, semiconductor stocks, SOXX, biotech stocks, IBB. They've really come on. So, and then beyond that, transportation stocks, small caps with the Russell 2000. I want to stay on top of that, as well as gold stocks and the 10-year treasury yield. So those are the various groupings that we have here. I did go ahead and put RSI again as an overlay. Descending, I want to see where the strength is. And take a look. This is software. This is an area for those of you that are following my show each week, and I urge you to do so, that software stocks really came to life here over, certainly in October, we started to see a move back in, but more recently, it's been very significant. IGV this week, which is one of many ETFs that you can use to follow software stocks. This area was up 3.3% for the week. And I'll tell you, with my MEM investment research, I have my MEM Edge report. We capitalized, got subscribers into this software area early, and we still are adding new names as they continue to break out. So for those of you that are not subscribers, I urge you to take a trial. You can do so. There'll be a link at the bottom of this video, and we can get you in front of some of these really strong and rightfully so strong software stocks. The growth numbers are quite superior. And then we can see the NASDAQ. I talked about this week. It outperformed S&P double. It has been outperforming for certainly the last 3 to 4 weeks, a lot of that having to do with the strength in technology. We've also seen a pickup here in gold stocks, and certainly this past week, a lot of it could have been this flight to safety with Mideast tensions, but gold stocks are really holding up in quite well. For those of you, again, that are sensing that you might want to get a bit defensive, good to note that these gold stocks are holding up quite well. And then as we move on, the semiconductor stocks, this is another strong subgrouping within technology. A little bit of a lackluster performance this week, but I will tell you they had a very big December, double-digit returns. And but despite this rather flat week, certainly on my MEM Edge report, we had a number of semis that were up triple and more this semiconductor index. So there's a lot of strength still within semiconductor stocks that are well worth noting. But as we move down, biotech stocks, this is another area that subscribers were able to get in early. October, it had a big move, pulled back here. We had anticipated that IBB would find support. I'll go ahead and pull up a large, last week, last Sunday's MEM Edge report, we talked about this pullback. We expected the index to find support, and it did just that. It pulled right back to the top of this other longer base, and more recently has been able to recover quite nicely. A lot of very interesting stocks in biotechs that are really worth taking a look at. So that's the broader market, and then a drill down beyond that. What we're going to do now is take a look at, we're going to take a little bit of a break, but there is a documentary that StockCharts.com has produced. It's going to be released at the end of this month, January 29th, and it's going to be a talk with Ralph Acampora, a renowned technical analyst, and we'll take a quick brief preview of that, and then we'll be right back with much more news.
I was staring at the north wall of my barn. Okay. It's 70 feet long, it's about 18 feet high, and just blank. And I said to myself, you know, 2017, I'm going to be 50 years in the business. Wouldn't it be cool if I could just put the history of the stock market? That's where the idea came from. I wanted to capture my 50 years.
And welcome back. I mentioned to you earlier in the show that we're going to be taking a look at some of the stocks or the companies that had some pretty electrifying news at that Consumer Electronics Show in Vegas. So this first company that we are looking at right now is Sony. SNE is the ticker symbol. This is a daily price chart. We can see this gap up. Take a look at this huge volume. This is the kind of characteristics that I like to see in stocks poised to trade higher. So we had a flat base here that was about a 3 to 4 week flat base. Nice gap up, huge volume. I'm going to take you back to another prior base breakout in the beginning of December where the stock pulled back and broke out of this 2 week base. And again, we did see a significant pickup on volume, and take a look at the advance out of that base. So bullish chart, the stock is overbought with the RSI above 70, but it can retain that for some time. And we can see your MACD in good standing with that black line up through the red, positive MACD signal on this gap up. Now, let's take a look at, or let me share with you some of the news and the reasons. Sony very unexpectedly unveiled a fully functional electric car, Vision S. Now, does not mean that Sony is going to get into the auto distribution or production. What they are going to do is go ahead and use this vehicle as a platform to market their technology that is very advanced, that is going to be part of these newer electric cars, whether it's Tesla or any of the other major car producers. So in other words, entertainment systems, image sensors, that's what Sony is going to be focused on. And it really took people by surprise. Another area for Sony is these next generation video consoles. And this is all about gaming. So Sony did come out with a later, newer, next generation video console that also had investors quite excited. One other area when we are looking at next generation video consoles, we do have to talk about Microsoft. They also announced and displayed a new version. This is that gap up on the news to new highs, nice volume. Microsoft has been a real big winning stock, certainly for subscribers to my MEM Edge report. It has really been in a very confirmed uptrend. So that is another CES show winner from last week. Let's take a look at another area that also came out with good news last week. And we mentioned earlier in the show that it was a big winner, and that is Google. Big snap up here. Now, they did begin this more recent advance on news of a leadership as far as management, a change of hands where the old management exiting, new management that were already in place are being elevated. So that was good news. But more recently, the stock last week, they announced and previewed their Galaxy Chromebook, their latest version. It's very lightweight, weighs 2.5 pounds, and it has faster Wi-Fi. Everything about it is faster. So that is another company that came out with news last week. And then one other area, the stock is not public yet, but Impossible Foods, they came out at that Consumer Electronics Show. You wouldn't think they would be a hit there, but they were. They introduced their Impossible pork plant-based sausage sandwiches that had all the journalists super excited. So we're going to keep an eye on Impossible Foods for when that IPO comes out. As you know, their competitor in that space did come out with their IPO, and it was very, very advanced as far as how well that particular stock, BYND. Let's just take a quick look because that is Beyond Burger. And we'll see. It's had a kind of a tough go here more recently, but they're coming back, understandably so, announcing a possible partnership with McDonald's. So we can see this downtrend reversal in BYND. And I'm just going to take a minute here and pull up the monthly, which is not very helpful. But the stock, when it IPO'd, it was very parabolic as to, here we are. This is the IPO here. The stock came out and it more than doubled. It almost tripled beyond that IPO. So we're going to keep an eye out for Impossible Burger or Impossible Foods for their potential IPO this year. And one other area that we can take a look at that presented at the show, and the chart doesn't look that interesting quite yet. Was hoping, let's just see if I can get this ticker symbol LNGVY. This is Lenovo, and it is not working, but we can look at HPQ because they are partnered with Hewlett Packard. And this, their particular announcement has to do with connectivity between PCs, personal computers, and that 5G network, so that you don't, when you're out and about with your personal computer, you don't have to worry about whether there is internet nearby. So this was a new announcement that sparked a potential advance in that stock. So that was some of the highlights from that Consumer Electronics Show. Let's go ahead and move on, because I talked about next week earnings season beginning. And for those of you that follow the market super closely, you may know that the first grouping of stocks that report each and every earnings season is bank stocks. So we're going to take a look at some of these big bank stocks. And what I wanted to share with you, I talked about that December advance in a lot of these stocks. We're looking here at Citigroup. C is the ticker symbol. I'm going to pull up a weekly just to give you a little more in the way of a view on this, because it was really quite exciting, certainly from my work, to see these bank stocks advancing out of a multi-year base. From my work, certainly when working with William O'Neill and Company, these stocks that break out, the longer your base breakout, the longer the potential advance out of that base. I switched over to a weekly price chart here. But it's also worth noting that going into earnings, the stocks are a bit stretched as far as their price relative to recent. This particular company, Citi, has a multiple of 12 times, and they can get as high as 17 times. So for those of you that pay attention to multiples, you can see that it's not overly expensive, but certainly it is priced for perfection. They're due to report next Tuesday. Analysts are raising estimates for the fourth quarter, and 14% growth is what they're looking for the full year 2019. Let's take a look at JPM. This really has been the bellwether winner, another winner on our MEM Edge report as well. But I am actually pleased to see that the stock has pulled back some, simply because when we are in this overbought position and the company does report earnings, oftentimes that can be a recipe for what you might call disaster, because again, the stock is priced for what one might call perfection. So if we go back to this company's prior release back here, JPM came out with numbers here. They gapped up, broke out of this base, and the stock has done nothing but, until more recently, been in a very confirmed uptrend. So all eyes on these bank stocks to see how they come in. One other bank stock that is due to report, there actually are several, but we can take a look at Bellwether Bank of America, BAC. Earnings estimates are single digit, but not quite that strong. But here's another one that really hit a new high at that end of December, and during this month has been marking time, if you will. But again, you don't want to I'm not a particular fan of buying stocks going into earnings, but particularly if they are in this overbought position, because unless the company reports superior numbers, you may be stepping into a bit of a trap, if you will. So those are some of the bank stocks. There are USB, Wells Fargo, also due to report. So as I said, investors really are going to keep an eye on not only how these companies report, do they come in ahead of estimates, but how do investors respond? That's going to be critical. So one other area that, or bellwether big name that's due to report next week is Delta Airlines. Airline stocks have really been languishing. They've been suffering year to date. But last week, this week, Delta Airlines is up over 2%. And I did want to mention that they were another presenter at that Consumer Electronics Show last week. And that is what this 2% advance is all about. What they did is had a huge booth where they profiled their new technology that they're going to be using. One of them is called parallel reality, where as a if you are using Delta Airlines, they will have personalized text sent to you throughout the period that you're in the airport as it relates to your flight and so forth. They also have announced AI, artificial intelligence, that's really going to drill down and analyze travel disruption and ideally make advances there. The stock, again, is due to report on Tuesday, so we'll keep an eye out on this large cap stock as well. One other company that is going to be reporting this week is ISRG, and I really want to share this one with you. Again, a company that MEM Investment Research, the Edge report, is very familiar with. The stock gapped up today, and I'll tell you why. They pre-announced they are due to report next week. And when a company pre-announces, and I have courses on my website that talks all about how to treat your stocks around earnings, what to be on the lookout for. Pre-announcements are very bullish. Companies are not, management is not going to put their foot out if the numbers are not anticipated to be good. So they did pre-announce numbers. Revenues look super good. They announced new products that were actually approved back in November. So Intuitive Surgical is a medical equipment company. They're most renowned for their Da Vinci, which is a robotic surgical device. And sales have really picked up there. So this stock broke out to a new high on volume. So that's another one that is due to report. One last one before we close out this segment is Taiwan Semiconductor, TSM. This company is, I would argue, the leader among semiconductor stocks. They are immune certainly to trade war fears because they already do work very closely with the largest semiconductor purchasers in China. China is a big client of theirs. They make many chips for Huawei, but the reasoning there is Huawei and China is a lot further along in their 5G development. That's that new network. The US still has a lot of hurdles, but China is ahead of the pace there, and TSM is a big supplier. So they're due to report next week as well. Another company in a bellwether strong area that is going to be very closely watched next week to see how they report. So those were the highlights there. I did want to spend a little bit of time taking a look. I think we have a couple of minutes left here, so we can take a look, actually 1 minute, of some of these Chinese stocks that are really doing quite well. So let's take a look. I'm going to just flip through some charts here. And this is New Oriental Education. They're the largest provider of private educational services, big earnings. They're due to report in a couple of weeks, but the stock gapped up. TAL is another educational company, TAL Education Group. Take a look, broke out of this flat base, advance. I think they're up about 10% this week. GSX, some of these smaller names, I'm going to pull up a weekly to give you a little more perspective on this. Actually, not so helpful, but the point here is that these educational stocks are really showing superior strength. One, and I can just only pull up the ticker because we have to leave it. This is NetTease, NTES, super strong stock. Have a great weekend, everyone, and I will see you next week.